we could be bringing in $2.2 million worth of dividends every single year. This is not financial advice. What's up, dreamers? I'm Zeke, and welcome to the Dream Green Show. Listen, in this video, I'm going to show you guys how much money do you actually need in order to live off of dividends. Now, I'm going to bring you guys 3 plays. Listen, I'm going to bring you guys probably the safest way to live off of dividends. I'm going to use SCHD and show you guys that way. And then I'm going to use a cover call ETF. That is probably going to be the cheapest and the fastest way by far to live off of dividends. And you really don't need that much money after all. And then I'm going to show you guys the 3rd way, which is probably the smartest way. What I would do, what I'm doing right now in order to live off of dividends that's cheaper and quicker, right? So I'm going to show you guys 3 of those ways in this video. So make sure you stick throughout the entire video so you don't miss out on any crucial information. So go ahead and hit that thumbs up button on this video. That really helps out this channel more than you guys can possibly even imagine. And while you're down there, if you could do me a huge favor and hit that notification bell right now, 14.8% of you have hit that notification bell. If we could get that to 15% over on YouTube, that would really be amazing, because YouTube be acting real funny. If you don't hit the notification bell, then they might not push out my video to you. I've been hearing about subscribers not seeing my videos. So if you guys don't want to miss out on these plays, I'm telling you, they don't want you to see these plays. I'm trying to tell y'all. So hit that notification bell, and you guys will not miss out on any future videos. So if you could do that for me right now, inside of the Patreon, I have a 7-day free trial going on for my lucid dreamers. I got a 7-day free trial going on for my dream team. Over here, I teach the real strategy, and I got 3 pro day traders in there that post their option trades every single day. And then we hold Zoom calls every Sunday where we go over all our plays and where I teach the real strategy and my leap option strategies and things like that. So if you guys do want to be a part of the Patreon and have access to me every single time I buy and sell a stock, and also to my pro day traders in there that post trades like this, post trades like this, and post trades like this, make sure that you join the Patreon. You have nothing to lose, and there's a 7-day free trial going on right now. But other than that, dreamers, let's give a quick word to our sponsor. My people, hold on, man. I got to put you guys on game that can help take your investment game to the next level. This video is brought to you and sponsored by Moomoo. This is a brokerage app that I use that gives me and you professional level tools in the palm of your hand. These tools can help you study the market and help you make better financial decisions. Now here's the part that I think that you would like or not. Right now, by clicking the link down in the description and in the pinned comment section, you can get up to 8.1 cash sweep interest on your uninvested cash inside of your portfolio. And on top of that, you can earn up to $1,000 in NVIDIA stock on qualified deposit. So you'll open your account, you'll fund your account, and then you'll get rewards inside of your account. So while you're sitting on the sideline waiting on the market to do its thing with your uninvested cash inside of your portfolio, you will be making 8.1% interest on the money that's just sitting inside of your portfolio. Now, for all the new investors out there, don't just jump inside the stock market making this simple mistake. That mistake is not understanding data. Moomoo gives you access to advanced charts, institution research, you get access to earnings analysis, and on top of that, you get access to real-time market data. All of these things will actually help you understand the companies that you are interested in. So you'll really understand why a stock is moving before you even invest. So if you're ready to take your investments to the next level, I would like to thank Moomoo again for sponsoring these videos. Those links are going to be down in the pinned comment section and also inside of the description. All right, now back to the video. All right, dreamers, we're back. Just that quick look. The easiest way to see how much you need to live off of dividends. Let me show you guys the formula right now. So if you did want to have $50,000 every single year in dividends, you'll take this number right here. Let's jump over to SCHD right here. This is SCHD, and right now they have a 3.40% dividend yield. So all you need to do to see how much money you need in order to make $50,000 in dividends on a ETF or a stock that pays a 3.4% dividend yield, you just take how much you need and you divide it by the dividend yield, 3.04, and you hit enter. So you need 1.4, let's just say $1.5 million in SCHD in order to make $50,000 a year. Now, let me show you guys something right quick. It's kind of crazy. The stock market is really only open 251 days out of the year, right? So in this example, we're going to say that we're investing $20 a day. So we multiply that by $20, right? So after we multiply that, we're investing around $5,020 per year. So we take that $1.47 million a year you need in an SCHD, and you divide that by how much you're investing per year, $5,020. It's going to take you 292 years in order to invest $20 every single day inside of SCHD. Now, it's really not going to take you 292 years, trust me guys, because of the compound interest effect. And with the drip turned on, where we reinvesting our dividends, we can get there a lot quicker. So don't worry about the 292 year mark. Trust me, we're going to get there a lot quicker. Watch the entire video, because man, we're gonna get there real fast. Now the next one I want to show you is a covered call ETF. They generate a lot of their income from selling covered calls on the shares inside of their portfolio that I talked about in one of my other videos. If you guys want to check that out, I'll try to leave a card right here, and you guys can check out that video. It's explain covered call ETFs and how we do it ourselves. But we jump back over here, you guys can see that they have a 3.88% dividend yield, right? So if we wanted to make $50,000 in QQQI, a covered call ETF, this will be the quickest way and the cheapest way, because we're going to divide that by 0.1388. That's the dividend yield, 13.88%. Hit enter. We will only need $360,000 invested inside of QQQI in order for us to retire and bring in $50,000 every single year. How long would that take? Investing $20 a day. It would take us 71 years. But trust me, like I said, we're going to get there a lot quicker. Let's dive into it right now. First, I'm going to show you guys the SCHD way, which will be the safest, by far the safest way to grow your dividend account. It's going to be long, it's going to be slow, but it's going to have that slow growth, and they increase their dividend yields every single year. Let me show you guys right now. Now, dreamers, the reason I love SCHD is because of this right here. They increase their dividends every single year by 8.68%, which is killer, especially when you're reinvesting in SCHD is growing itself. But on top of that, this is the most impressive number I like so far, is that they've been able to grow their dividends every single year for at least the last 14 years. And I highly believe that SCHD is on their way to increase their dividends every single year for the next 25 years. So if we jump over to this dividend calculator, let's make it just a little bigger, and we type in SCHD. So we're going to start off with one share worth of SCHD, and they have a dividend yield of 3.4%. Let's just keep it 3.4%. And they've been able to increase their dividend yields by 8.68%. And let's say they've been growing their stock by 10% every single year. And we're going to invest for the next 30 years. Now, this is the big thing right here. Drip has to be turned on. That means we are reinvesting our dividends. So remember, we're going to be investing $20 a day, or $5,020 per year. And then we're going to hit calculate our dividends. So let's hit this right here. And as you guys can see, we have a $1.3 million account by the time we're ready to retire, but we will not have that $50,000 that we're looking for to retire. So let's say if we invest for the next 35 years, hit calculate, and there it goes. Maybe we can squeeze in with 34. No, so we do have to invest for the next 35 years, and we have to have $2.3 million invested inside of SCHD to bring in $52,000 in dividends every single year. So the safest way is going to take the longest. It's going to take you 35 years to invest inside of SCHD with the account balance of $2.3 million in order to bring in $50,000 in SCHD. So let's take a quick look at that. It's going to take us 35 years, and we're investing $20 a day for 35 years. That's going to be 50/20. So we would have invested $175,000, which is pretty cool. A lot of people could find $10, $15 to invest every single day, but we would have only invested $175,000 inside of SCHD, and we would have a $2.3 million portfolio after 35 years. So that's not a bad play at all. It's just going to take some time. So now let's look at the covered call ETF, QQQI. All right, so here we are on QQQI. It is a high yield, high income dividend ETF. What they do, they sell covered calls versus their shares in there, and then they get that premium, and then they pay it back to their investors in the form of dividends. Now, the thing with covered call ETF is that they usually get ate up by NAV. Let me show you guys what I mean by that. So if we're looking at QYLD, Most of them are going to look like this. Let's scroll down to dividends. They're going to have a double-digit dividend yield, but their growth rate is going to be shrinking, right? So if we look at the summary of QYLD over the last 10 years, it's going to be a line that's just going straight down over time. So that is a company that pays a high dividend yield, and because they pay such a high dividend yield, they're not able to grow their company. And they're going to get ate up by NAV to where the price is just going to continue to fall. They're going to have a reverse stock split, and then price is going to continue to fall, hoping that the dividend payout is going to be higher and then the stock is falling, right? So that's where a company is going to get ate up by NAV. But the thing with QQQI is that they've been able to beat NAV, kind of trading sideways over the last year. They're up 18% over the last 5 years. They're kind of just trading sideways over the last 3 years. They haven't been around 5 years yet. So I like to choose this company. It's not enough data on them yet, but they seem to not be getting ate up by that much NAV, and they're having an amazing dividend yield. So let's take a quick look at QQQI. Let's go down to the dividends. You guys can see that they have a 13.88% dividend yield. So here we are. We're going to start off with one share. They have a 13.88% dividend yield. Let's say they're able to increase it by 1%. I doubt it, but let's look right quick. Yeah, they have over the last year, they have a 1.66% growth. I don't know how they're going to be able to keep it up, but let's just put one, and let's just say the stock increased by 1% every single year. And once again, we're going to invest for the next 30 years, $20 per day, 50/20. Let's zoom in just a little bit so you guys can see, and let's hit calculate our dividends. So let's hit calculate right there. All right, after 30 years, you'll be bringing in $244,000 in dividends, but you will have a $1.6 million account. Of course, if you did it at the same time as SCHD, you'll have 3.15 million, bringing in $466,000 per year. Let's just say you invested for 25 years. Remember, we're only looking for $50,000 per year. Let's try 10 years. No, let's try 12 years and hit. All right, so we need a little bit more than that. Let's try 15 and 16. Let's try 20 years. Let's try 18 years. And let's finish with the last one, 19 years. So it's going to take us 19 years. So other than it being 35 years with SCHD, it's only going to take us 19 years inside of what QQQI to bring us $56,000 per year in dividends. And we will only need $380,000 invested inside of QQQI. And let's see how much that would have cost us over time. So we needed 19 years times 50/20. We will have only need to invest $95,000 inside of QQQI to bring in $56,000 per year. Now, let me show you guys this one trick, right? We could get there even quicker and divide how much you needed to invest in half. So let's take $95,000, divide that by 2. Let's say we only going to invest $48,000 inside of QQQI. Let's say you had a property, you sold a property, you had some land, you sold the land, you got a car that you didn't need anymore, and you sold that car, and you came up on around $48,000, right? So let's take $48,000, jump back over here. The price of QQQI right now is at $53.89. So let's just buy $48,000 worth of QQQI shares right now today. So we're going to divide that by 50.89. We could buy 890 shares worth of QQQI. So let's type in 890. And once we have 890 shares, we're not going to reinvest at all. We're going to change that to 0. And let's hit calculate our returns. Bam. So we could get there even quicker, cheaper, because in 19 years, now we're bringing in close to $80,000. So let's try 15. Let's try 16. And there it goes. From one single investment of around $48,000 16 years ago. In 16 years, you will be bringing in $54,000 per year in dividends. So that's 16 years compared to 35 years. You could get there 19 years faster, which is insane. So that is the cheapest and the quickest way to get to bring in $50,000 per year. Now, let me show you guys probably the smartest way. What you want to do is, this is what I'm doing. I'm investing inside of growth stocks that's growing really fast. And then by the time I'm ready to retire, I'm going to take that growth stock, and then I'm going to take my profits from that growth stock that's growing really fast. It might not pay any dividends at all, but I'm going to take the profits from that growth stocks. When I'm ready to retire, I'm going to move it to a dividend paying ETF or a dividend paying cover call ETF. Take that profit, put it inside those dividends, and then I can live off of that dividend yield and probably make even more income from dividends by doing it the smartest way. Maybe not the quickest, maybe not the safest, but the smartest. So you could find a good growth ETF like the S&P 500 or QQQ, which tracks the top 100 technology companies in the world, or you could pick an individual stocks. Me, the stock that I chose was Apple. So let's take a quick look at Apple. So when we're looking at Apple, you guys can see the growth. Last year, they're up 37% last year, even after this dip right here. But let's look over the last 10 years. Over the last 10 years, they grow around 92% per year. We're not going to use 92% per year on Apple, even though they did grow 922% over the last 10 years. I'm telling you, man, Apple be killing it. But we're not going to use 92% per year on Apple. Let's make it just a tad bit more realistic, a lot more realistic. I don't know. It's still crazy, but we're going to use 25%. So let's jump over on Apple right quick. So here we are, we're on Apple, starting off with 0 shares. We're going to invest $5,200 inside of Apple over the next couple of years, right? They really don't have a dividend yield. We could keep all that the same, but we're going to say that Apple increases by 25% per year for the next, we're going to say 30 years. I'm ready to retire in 30 years, and let's hit calculate our returns. Bam. So we will have $16 million inside of Apple, right? $16 million inside of Apple. We're not going to be bringing in anything in dividend income. Apple really don't pay a dividend, right? But we're going to have $16 million worth of Apple. So after 30 years of investing inside of Apple, we have $16 million. And how much will we receive in dividend payments from if we change our $16 million over to SCHD? Let's see how much we'll be bringing in. So we'll multiply that by 0.0344. This is SCHD dividend yield. Hit enter. We'll be bringing in $550,000 per year in dividends. So that's way more than $50,000 per year in dividends from investing $20 a day inside of SCHD versus Apple, right? So we could get to $50,000 a lot quicker using if we invest inside a growth company, switch it over to SCHD, live off those dividends. Now, if we did want to do $16 million and invest that inside of QQQI, which is 1388, we could be bringing in $2.2 million worth of dividends every single year, right? That is insane. So from that's why I say it's the smartest way. You invest inside a growth stock, let the stock market grow. Take your profits after maybe 10, 15 years. You could take it and put it inside of SCHD and still let the rest ride with Apple. You could take half of your profits, put it inside of QQQI, and then let the less ride with Apple or whatever growth. Because even if you invest inside a ETF, let's look at an ETF like QQQ, right? Even if you're investing inside of QQQ still grows at a very fast rate as well. They're growing at 50% every single year. Over the last 10 years, they're up almost 500%. So you do not have to pick an individual stock. You just need to pick a growth ETF that's kind of diversified, even though QQQ is not really diversified. They heavily invest inside of the technology sector. But that strategy, the smartest strategy, mine's in the long run, right? You will have a lot more money that you could put inside of dividend paying companies versus the quickest way, which would be called ETFs, which is a lot more riskier. You could get ate up by NAV, but that would be the cheapest way. And then the safest way is just go ahead and invest inside of a dividend paying company. Let me know down in the comment section which one of these strategies is your favorite. Down in the comment section, can't wait to see what you guys say down there. Once again, if you guys do want to join the Patreon, I'm gonna leave a link to Patreon section. That link is gonna be down in the description. And while you're down there, don't forget to subscribe to the channel and also hit that notification bell. That helps out this channel more than you guys can possibly even imagine. And if you're struggling, wondering how to get started inside of the stock market, and you really want to learn how to change your mindset, check out this video right here. It's gonna take you to my most viewed video. It changed completely how I started to invest inside the stock market, and investing and becoming rich became very easy once, you know, I gave out every point in this video. So if you guys want to check that out, that link is going to be right there. And once again, I would like to thank today's sponsor of this video, Moomoo. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out.